All right. Good afternoon, everyone. Thanks for joining. You're welcome. You're welcome. So, if you once you join, just tell us your name and where you're joining from. Please don't forget to like and also share the link. So, like and share the link right away. Like and share the link. So, tell us your name and where you're joining us from. Tell us where you're joining us from, your name and where you're joining us from. Okay. I have Tamino, Tamino Biri Samuel from Port Harcourt. We have Brian from Zimbabwe. Wow, Zimbabwe. So tell us your name and where you are joining us from. If you can't still hear me, try and try and refresh your network. Okay. So I have a Emmanuel Gaflopi from Anambra. I have Diabo from Lagos, She from Lagos, Dan Lord, Daniel from Ghana, uh, Julius from Kaduna, Rinzi from Lagos. If you can't hear clearly, refresh. Refresh. Okay, we have Boma from Bauchi. Boma from Bauchi. We have Paul from Lagos. We have Abel from Kano. Okay, thanks for joining. Thanks for joining. So please, once you join, share share the link. Share the link once you join. Okay, we have Shama from Nasarawa. Shama from Nasarawa. You're welcome. We have Wisdom from Port Harcourt. Wisdom from Port Harcourt. You're welcome. Sorry, my camera is off. As I was about to start, they just took the light like that. They just took the light like that. We have Abdullahi from Kaduna. We have Ogbonna from Ebonyi. We have Amaka Igwe from Abuja. Let's still wait for some persons to join. So please, once you join, tell us your name and where you're joining us from. your name and where you are joining us from. Your name and where you are joining us from. Once you join, tell us your name and where you're joining us from, and you can also share the link for others to join. Share the link for others to join. Okay, I have Rachel from Abuja. Rachel from Abuja. Timothy from Ghana. Timothy from Ghana, you're welcome. Roland from Benin City, you're welcome. You're welcome. You're welcome. I have Ibukun Victor from Ikeja. You're welcome. You're welcome. I have Lukman from Ilorin. Lukman from Ilorin, a Nigerian footballer. You're welcome, Lukman. We have Okichuku from Owerri. Okichuku from Owerri, you're welcome. We have Damian from Jos. Can see you, Damian from Jos, welcome. Um, Sam from Ondo State, you are welcome. Sam from Ondo State, you're welcome. Honesty from Delta, you're welcome. Joel from Abuja, you're welcome. Jacob from Calabar, you're welcome. MC Benzolo from Cameroon, you're welcome. There is noise in the background, sir, and the audio is cracking. It's not a noise, it's the background music. Lawrence from Ilorin, you're welcome. Arinze from Enugu, you're welcome. Obasi from Otukbo, you're welcome. Alani from Lagos, you're welcome. You're welcome. All right. So I want to specially welcome every one of us here once again. My name remains Okoro Nehemiah, the financial analyst from TradeWave. I'm the head of training from TradeWave. Okay, people are still joining. People are still joining. People are still joining. Okay, I have Brian from Uganda. Brian from Uganda. We have Unique FX from Abu Bakar from Abuja. Um, Fred, Ferdinand from Yenegua. Yenegua. Ferdinand. I know Yenegua very well. I grew up in Yenegua. So welcome, Mr. Ferdinand. Um, Austin from Utubo. Austin from Utubo. Okay, so once you join, tell us your name. I know you're joining us from. Okay, so once again, I want to welcome everybody to this session. In this session, I'm going to be teaching us how to properly pass a prop firm account. Yeah, how to pass a prop account. I think sometime like I had a session. I had a session, the first ever session, live session, but that was on Google Meet on how to pass a prop account. So after that, a lot of persons were asking, do we have, is there another class? Is there a recorded class? Unfortunately, we didn't record that class, and a lot of persons missed that class. Reason why we've decided to come up with another class. So this class is going to be tailored as a makeup class for the first one, and I'm happy it's going to be recorded. So in case you want to come back to it, you can come back to it and watch it. All right. So I'm going to be giving like I'm going to be dishing out everything I know on how to pass a proper account. All right. I'm not going to be withholding anything. I'm going to be dishing out everything, every single thing on how to pass a proper account. So what I just want you to do now is get your pen and paper and listen attentively. Listen attentively. so that you will grasp whatever I'm saying. All right. So listen attentively so that you can grasp whatever I am saying. Okay. Okay. We have Linus from Lagos and we have Don Faster from Ghana. All right. So let's dive into the class. Let's dive into the class. So the class topic we have for today is how to pass a prop challenge. All right. So first of all, I'm going to be defining what a prop challenge is or what a prop challenge account is. So what is it? A prop challenge account is a stimulated test. Take note of this word. It is a stimulated test. It is a stimulated test. It is a stimulated test where you must hit a profit target and obey strict risk rules and obey strict strict risk rules and obey strict risk rules. Daily max, daily max loss, overall drawdown, minimum trading days, allowed instrument, etc. Passing the evaluation sometimes two phases earns you a funded account and profit. All right. So I want you to take note of these two phrases. First, it is a stimulated test. A prop account is a stimulated test where you hit a profit target and obey strict risk rules. Now, the first thing you have to note about prop account is it is a stimulated test. It is a test for you to pass. So, because it is a test, let's say for instance, if you want to write an exam, if you want to write an exam or you want to write a test, first you have to read for that test. Have to read for that test because if you do not read, I don't think there is a way you can pass that test. Do you understand? So having to know what perfume entails is your reading. What are the rules you have to know the rules? What is perfume? You have to know what perfume is. Everything surrounding perfume you have to know. So it is a stimulated test. At the back of your mind, know that it is a test you have to pass. So because it is a test, it is not a lucky game. So perfume is not passing a perfume is not about I was lucky. You can't pass a prop account by luck. The same way you can't pass any exam by luck. If you don't read, you can't pass it except you want to do malpractice. And obviously and unfortunately, in when it comes to passing the perfume account, there is no it is a stimulated test. And secondly, strict risk rules. Now, there are rules you have to obey in order for you to hit your max profit. If you don't, if you don't obey those rules, you're definitely going to end up losing the account. All right. So it is not a lucky game. It is not the game of I was lucky. It has to do with discipline for you to be able to pass a perform account. So of course we all know that there are different prop accounts. There are different prop firms. It's just for you to locate the authentic one, the real one, that they will not scam you of your money. So there are a lot of prop firm accounts there, but we um, always recommend funded next is the recommended prop firm account we are using. All right. So First, know that it is a stimulated test, and secondly, it is a strict risk rules that you have to obey before you can pass. And lastly, you can't pass Profem being lucky. It is not by luck. All right. So let's move on. Common rules and examples. What are the common rules when it comes to common rules? Let's look at common rules when it comes to passing a proper count. Common rules. First is a profit target. Profit target. So I would want to be as fast as possible as I can so that we will not spend much time on this. So the profit target is usually the percentage profit you are expected to reach before you pass the account. So some prop firms have 8%, 10%, thereabout. All right. So depending on the prop firm account. For instance, funded next for the two phase accounts, the first phase you have to pass 8%, you have to make 8% profit target, and the second phase is 5% profit target. While the one phase account, you just have to make 10% profit. So profit target is that percentage you reach before you can pass the prop challenge. The second thing you have to know is the maximum daily loss. Max daily loss. Max daily loss. Now the max daily loss is the amount you lose or the percentage you lose in the account for that day before before your account will be deactivated. Some firms are 4% daily, 5% daily, 3% daily. Oh wow, I have like 3% daily. So if you can be able, if you can be able to, if you can be able to obey the rules of not breaking the daily losses, not breaking the daily losses, I mean, you can be able to pass your prop account. All right. So that is that for the daily loss. All right. So let's move ahead. Then the next thing is overall max drawdown. Overall max drawdown. Overall max loss. Now the overall max loss is the overall percentage you will lose in the account and the account will be deactivated. That's the overall max drawdown. Then the last thing is minimum trading days. The minimum trading days. Now the minimum trading days is the amount of days you need to trade. The least. So some you have to trade at least for 5 days, some you have to trade at least for 21 days, you have to trade at least for 20 days, 2 days, depending on the prop account it is. All right. So now let's go into um, the preparation stage. Preparation stage. Now, before you buy a prop account, before you buy any account, you have to preparation stage. The preparation stage. Before you buy any prop account, you have to prepare. You have to prepare. You don't just wake up and then uh, you decide to buy a prop account without proper preparation. You have to properly prepare before you get any prop account. Okay. So what are those things you need to do? What are those preparations you need to do before you get a prop account? So first, you have to backtest your strategy. Backtest your strategy. Backtest your strategy. Backtest your strategy. Now, the reason for backtesting strategy is to make sure that this strategy is working. Because passing profile is not just a lucky game. You have to make sure that your strategy is is reliable enough. Your strategy is reliable for you to be able to pass that prop challenge. If you do not backtest any strategy, don't make use of that strategy. A prop account is not just something you just purchase and then you start trading. Whether it is the highest mentor or the highest forex trader in this world that taught you that strategy, make sure you backtest that strategy first. Because without backtesting the strategy, it will be very, very difficult for you to know if you pass the account or not. It will be very difficult for you to know if that strategy is good for a particular prop firm you want to trade, for a particular pair you want to trade. So you have to do a thorough backtesting of any strategy. Backtest your strategy thoroughly before you can proceed to trading any prop account. Secondly, even as hard as it sounds, you have to do them. Forward demo trade the strategy. So you forward demo trade, forward demo trade the strategy. Forward demo the street that strategy. So once you are done back testing the strategy, you don't end it. It's not after back testing, you now go straight to getting a proper account. It's very wrong. The next thing you have to do is you trade it on a demo account. You practice that strategy on a demo account on a real time. Now, you're no longer back testing, you are forward trading. All right, you're trading in the real time, but at this time, it's in a demo account. You trade that strategy in a demo account for some time, at least for 1 month, to make sure that okay, even on a live trade, this strategy is working fine. Once you have determined that this strategy is working on the demo account, the next thing you do is you build consistent metrics. Build consistent metrics. Consistent metrics. So please, at the course of this, if you have any question, you can just type the question on the comment box. As time goes on, if I see the question, I'm going to answer your question. So build a consistent matrix. All right. Now, monitor at least 50 to 200 trades from that strategy. At least 50 to 200 trade. Now, that means that demo you are trying to trade, make sure you are trading every opportunity to you see to trade in the forex market. Trade it at least from the 50 to 100 to 200 trades. It will give you the number of wins you've gotten from that strategy. Now, with that number of wins, you will now know if you are proceeding to use that strategy to trade on this prop account or not. So you must build consistent metrics in trading that strategy on a demo account. So you should have at least 50 to 200 trades, at least 50, 50 trades. Once you have 50 trades, let's say you have a total of 50 trades. If 30 out of 50 gives you a positive result, then that strategy is good. It can give you as far as 40 positive trades, 40 positive outcomes, then that strategy is good. But anything less than 30 positive trades, that strategy is not a strategy for you to use to trade any proper account. So monitor from 50 to at least 200 trades before you can ascertain that this strategy is a very good strategy. The next thing you have to do is record everything. Record everything. It all boils down to journaling. Boils down to journaling. Now, journal your trades. In as much as it is difficult to say sometimes you can't journal the trade, you feel it's very difficult, you have to journal everything. You have to record everything. Everything you're doing in the forex space, you have to record it. No matter what it is, you have to record at every point in time. Record everything you're doing. Record everything you're doing. record it, journal. If you journal it, it is going to give you the progress you've made, the mistakes you've made, and how to correct those mistakes. So at every point in time, always journal your trade, record your trades, record everything you're doing. The next thing you have to do is practice position sizing precisely. Practice position sizing. Practice position sizing. Now, when it comes to trading a prop account, you don't just trade it. You trade a prop account like a fund manager. Now, if you come across any fund manager, you will see how consistent they are in their trading, especially in their lot sizing, because lot size can also play a very vital role in your trading. Let's say, for instance, if you are inconsistent with your lot sizing, and then you are making more losses, even the wins you're making might not be able to cover up your losses. So let's say, for instance, you use a particular lot size today and you lose, you increase it to pro and you still lose, and then the next day you now bring the lot size down. And at the end of the day, you make profit from that trade. Now, because you brought it down, probably because you're scared of losing, it will not cover the losses you've made. So be consistent with your lot sizing. Be consistent with it. Do not change lot sizing. Practice being consistent with your lot sizing. All right. Then the next thing you have to do is practice under one rule constraint. Practice under one rule. Under one rule. Now, what do I mean by this? In as much as this one is really funny, but then again, I have to say it. In as much as news is very sweet to trade, in as much as news is very, very sweet to trade, it's very, very tempting to trade news. Listen, in as much as it is very tempting to trade news, do not trade news on a prop account. Do not trade news on a prop account. Please, will there be a time for questions? I have two questions. Okay. Please, we need more explanation on consistent. We need more explanation on consistent metrics. Okay. Please, sir. I know that everyone have their technique strategy to pass a proper account, but how long should I take average it to pass a phase one and a phase two account? Okay, I'll come to that. What about consistency rule and max tradable volume? Okay, I'll come to that as well. I'll come to that as well. So, what am I saying in essence? Now, when it comes to practice under one rule, in as much as news is very sweet to trade, avoid trading news. Yeah, avoid trading news. Now, news like the FOMC that happened yesterday, you see the way it was just fluctuating up and down, up and down, up and down. Now, at that point, sometimes you get confused. You will think that, okay, news is actually going your way before you know it is reversing against you. In the next minute, you think it's buying, the next minute is selling. So avoid trading news because of how volatile news can be most times. Do you understand? It can disorganize your settings. So avoid trading news. Avoid trading news. Avoid trading news. All right. So these are the rules you have to look out for. First, backtest your strategy. These are the preparation stage. These are the preparation stage before you start trading a prop firm. So first, you backtest your strategy. Second, forward demo. Forward demo trade the strategy. Third, build consistent metrics. Now, somebody said I should throw more light on the consistent metrics. I mean, make sure you've taken at least 50 to 200 trades on a demo account with that strategy before you can confirm that this strategy works. If your trade is not up to at least 50, 50 trades in total, not in one day, in total. Even if you take that trades for like how many days you need to take the trade, but make sure you take at least 50 trades, 50 to 200 trades for you to ascertain that this strategy is working. It should be on a demo account. That is what I mean by build consistent metrics. All right. Then record everything. Make sure you journal everything. Practice position sizing. Your position sizing, your lot sizing should be consistent. Don't be switching it. Today you switch, tomorrow you switch, today you switch, tomorrow. It should be a consistent lot sizing scheme. Now understand that some pairs can have higher value than the other. But even at that, the position sizing shouldn't have much difference. Do you understand? So let's say for instance, you have you have uh, you have an account, you have a you have a prop account of $5,000, and then in that prop account of $5,000, you have decided to risk. Let's say you're risking $50. Sorry, you're risking $10 for every trade, or let's say you're risking $50 for every trade. Now that $50 you're risking for every trade, let's say it's a pair like Euro JPY. That should be like 0.25 to 0.3 lot size. So even if it should be that all the trades you're placing should be from 0.25 to 0.3. So with that, you already have a consistent lot sizing. All right. Then practice under one rule. That one rule is don't trade news. Don't trade news. Okay. So let's look at metrics that proves you have an edge. Metrics that proves you have an edge. What are the metrics that proves you have an edge? Metrics that proves you have an edge. Now, what do I mean by this? I mean by those metrics that proves okay, you already have an edge when it comes to trading a prop account. You can go ahead and trade your prop account. So, what are those metrics? First, consistency over time. Consistency over time. Consistency over time. All right. So now, what does this consistency over time means? Now, some some prop firms requires you to be consistent. It's not about how much you trade. They just want to see the consistency with your lot sizing. That's why I said practice lot sizing. This is another reason why you will be like, okay, I did not do anything. They just sent me a message that I have lost my account. No, it is because you're not consistent with that rules. It is because you are not consistent. That's why you just get a message your account has been breached. They necessarily do not want you to make all the money. They just want to see how consistent you are. How consistent is this person? Once they detect that you're not consistent, maybe with your lot sizing, maybe with the pairs you're trading, they are definitely going to breach your account. So choose being consistent over maybe the time of your trading. You want to trade every time. No, that is not it. It is not the matter of trading every time. You want to beat the time. You want to beat the time of the trading. You want to pass a proper account in 2 days. Are you okay? That's virtually gambling. Do you understand? So there are some scenarios you can actually use one trade to pass a proper account. But then again, be consistent. All right. Focus on being consistent with your lot sizing, with the pairs you're trading, with your style of trading. Now, note that prop firms they can actually detect the style of trading you use, your approach to the market. So if they discover that you are using a lot of approaches, they can also breach your account. So Stick to consistent approach, consistent lot sizing, consistent pairs, consistent timing. Is it that you're trading the London session or the New York session? So stick to that time and be consistent with whatever it is you are doing. Be consistent. Be consistent. Okay, I think I have a lot of questions here already. I have a lot of questions here already. Please, sir, I know that everybody has their okay. Be consistent. Don't look at the time, but how long should you don't look at the time. Just be consistent in what you're doing. You will pass your proper account. What is consist? Okay, what about consistency rule? Now, if there is this is the consistency rule. If there is consistency rule, you have to also stick. You have to also take note of that in your trading. Every profit account. Will your account be breached if you didn't use stop loss and you close the trade? I don't even understand why you will not be using stop loss for every trade. For every trade you are placing, please make sure you use stop loss. Make sure you make use of stop loss because it is very, very important. It is very, very important. Make use of stop loss. Don't just trade like that. Make use of stop loss. All right. This guy said, I have been waiting for this. Okay. Avoid news markets. Yes, avoid news. Avoid news. Avoid news. What prop firm do you recommend we should trade with? Trade with funded next. Funded next. Funded next. How long does it take to pass a prop challenge? Don't look at the time, focus on consistency. Question about lot sizing. We know that the volatility varies from different pairs, as such as using one lot size for different pairs is not visible. What can be done about this point? Now, for every pair you are trading, I will get to this. I will get to this. Is it advisable to use signals to pass a prop challenge? No, it is not advisable. Don't use signals to pass a prop challenge. It is not advisable. Which prop which prop firm accepts synthetic trade? Accept I don't know of any synthetic trading prop firm for now. I don't know of any synthetic prop for now. Okay, let's go back. Let's go back to so the next thing is profit factor. Profit factor. What do I mean by profit factor? Now, like I said, if you're trading in the forex space or if you're trading a prop account, trade like a fund manager. Now, a fund manager is not after the big wins. Do you understand? He's not after the big wins. Why? The reason is because big wins, fine, but there are times markets can be tricky. So instead of you looking for the small wins, cut your profit. If you're trading a prop account, I will advise your profit should always be 1:3 highest, 1:2 or 1:3. 1:3 should be the max. Now, the reason is because if you're using 1:3, it is easier to achieve 1:3 than it is to achieve 1:10, 1:5, 1:15. It is not your personal account. It is account you're trying to beat up to a profit target. So just do the little you can at every point in time. Your profit factor should not exceed 1:2. Sorry, 1:3. 1:3. It should not exceed 1:3. 1:3 is very, very okay for you. Because if you're choosing 1 is to 3 or 1 is to 2, it is very, very easy for you to achieve. All right. So let's say, for instance, in the case where you're risking 30 pips and you're using 1 is to 2, it's very, very easy for you to achieve 60 pips in the forex space. So do not do not exceed 1 is to 4. Sorry, 1 is to 3. You can't exceed if you find out that the market is very volatile and it can give you 1 is to 5. Highest you should do, highest, highest you should do should not be 1 is to 5. Highest you should do 1 is to 5. The highest you should do 1 is to 5 is okay. So from 1 is to 3 to 1 is to 5 is what you should be looking out for when you are trading. 1 is to 5 is if you discover that price or the market is very, very volatile and it has a tendency of giving you a very, very good reward. You can go ahead, but it should always be from 1 is to 2 to 1 is to 5. All right. Now, the next thing you have to look at is low maximum intra-period drawdown while showing strategy returns. Now, if you notice that as you were trading in a demo account, you are having a low max drawdown, then you are good to go. You have an edge. So let's say, for instance, you set a max drawdown of 10% for yourself, and at the end of the day, you have, let's say, a max drawdown of 5%, then you are good to go. If you set time for yourself and after that period of time your max drawdown was 5%, 6%, then you are good. If if at the end of the time you set for yourself, let's say you set 1 month to trade that strategy on a demo account, and after the 1 month, let's say you did not make profit, but your max drawdown was 5%, then you are good to go. You're already building an edge in the forex space. So you are good to go. All right. Now the next thing is this: position sizing and risk math. Let me now teach position sizing and risk maths. Position sizing and risk math. This is where most traders fail. In fact, this is where you fail. Yes, you that you are looking at me. You that you are looking at me. This is where you fail. Please, my trade will still offer does trade will still offer prop passing service, and please how does it work? Yes, we still offer props passing service. Go to any of our social media handle and send us a message, send us a DM, preferably on Instagram. Send us a DM on Instagram. We'll reply, we'll respond to you. Sir, I have a very long question. I wish I could use voice notes. Try and type it. I will respond to it. Fix, take profit 1, 2, and 3. So can it be possible on a Profem? Now on the Profem accounts, there is only fixing take profit 1, take profit 2, take profit 3. Have a fixed take profit for one trade. Each particular trade should have a fixed take profit. A fixed take profit. Okay? Don't be doing take profit 1, take profit 2. It's not a personal account. You should have a fixed take profit. All right. Please, how do we calculate pips for gold? Don't trade gold on don't trade gold on the on the challenge account. Don't trade gold. Don't trade gold. An advice from me. So let's go back to position sizing and risk math. Position, sizing, and risk math. Position, sizing, and risk math. Now, this is where most traders fail. You must control absolute risk, not just lots. First, a core rule: percentage risk. Core rule. Now, under core rule, percentage risk. Whoa, percentage risk. It's not easy to explain this, but I'll try my best to explain it very well so that you understand. Now, decide a consecutive percentage of starting account equity to risk per trade, common to risk per trade. Now, how do you go about this? First, what you have to do is note that for every account you are trading, for every account you are trading, you are not actually trading that account. That is not the account they give you to trade. The account they give you to trade is the max drawdown, the overall max drawdown. That is the account you are actually trading. Now, this is where most traders get it wrong. That you bought a 50K account, a $50,000 account, does not mean you are trading that $50,000 account. You are not trading that $50,000 account. What you are actually trading is the 10% maximum drawdown that was given to you. Because tell me how somebody will give you a $50,000 account and tell you to make just 5%, just 10% of the account. Do you understand? So it is not obtainable. With a $50,000 account, you can make more than 10% in it. So think about it. The account you are giving is 50,000, is $50,000, right? But what you are actually trading is 10% of that $50,000. If you have $100,000 account, the account you are trading is not $100,000. The account you're trading is actually 10% of that $100,000. That's the max drawdown they gave to you. And the max drawdown of 10, the max drawdown of $100,000 is 10%, and that 10% is $10,000. So the account you are actually trading in essence is $10,000, not $100,000. Now, knowing that you're trading a $10,000 account instead of $100,000 account, what do you now do? Your risk percentage per trade should not be from the $100,000 account. It should be from the $10,000 account. It should be from the $10,000 drawdown you're giving. All right. So now, what do you now risk? You risk 2% of $10,000. So if you're risking 2% of $10,000, that's how much. That should be $200, I guess. That should be $200. So 10,000 times 20%. Sorry, yeah, sorry, 10%. I mean, sorry, it's 10%. Yeah. So you're risking 10%. Am I saying 10% or two? Sorry, 2%, not 10%. 2%, not 10%. 2%. Yes, 2%. You're risking for every trade, you're risking 2% of every trade. You're risking 2% of $10,000 account. Let me come again. So now you're giving $100,000 account, and out of that $100,000 account, the max drawdown is 10%. And 10% of $100,000 is $10,000. Now, note that what you are trading with is $10,000, meaning if you lose more than $10,000, you have blown the account. You're not trading with $100,000, you're trading with $10,000. So, to start trading, your risk should be from $10,000, not from the $100,000. So, for every trade you want to place, only risk 2%, only risk 2 to 5%. Yeah, let's say 2 to 5%. Risk only 2 to 5%. So your risk percentage is is 2 to 5%. Let's say you have an account of $100, $100,000. Yes, $100,000. Your max, your overall max drawdown is 10%. Is 10%. Now you now 10% of this account is $10,000. Right? So what you are trading is actually 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 $1,000 and not $100,000. So your risk per trade should come from the $10,000. And you should risk 2 to 5% per trade from the 10 from the $10,000. All right, so this is an explanation of what I'm saying right now. This is it every day. It's not everyday training, no, it's 10%. Yes, I'm really making sense. Thank you very much. So I'm typing it so that you can everybody can see it. So let me rephrase. If you have $100,000 account, the max drawdown is 10%, right? Now that 10%, if you convert it to dollars, is $10,000. What you are actually trading in essence is not the $100,000. It is the $10,000. Now, if you want to trade the $10,000, your risk, if you want to trade that prop account, your risk should be from the $10,000, not from the whole $100,000. So, if you want to risk, only risk 2 to 5% of every trade. So, for instance, now, if you are risking 2%, you're risking just $200 instead of risking like $1,000. Because if you say, okay, let's risk 1% of $100,000 account, it's $1,000. Do you understand? It is $1,000. So by the time you reach 2% or 5%, let's say you reach 5%, which is $500, and your profit target is 1 is to 3. 1 is to 3 gives you $1,500. You're already 1.5% above. So by the time you keep trading like that, being consistent like that before you know, you are passing the prop account. So what you are actually trading for every prop account is not the amount given to you. It's not the it's not that initial amount given to you or that particular price you bought. It's not the $10,000 account. It's not the $20,000. It's not the $100,000. It's not the $25,000. It is the max drawdown that you are trading, not the particular account. So if you are risking, risk from the max drawdown, not from the overall account, and risk 2 to 5% of every account. Does this make sense, please? Does this make sense? If it's making sense, please type value. Type value. There is a recorded class. There is a recorded session. I'm recording it. So after now, you can come back to watch it. So if what I just said right now makes sense to you, write value. Write value. If it does not, let me know that okay, you still need some explanation. Okay, I'm seeing value. Value. All right. So let me continue. So you're not trading that account. Okay, okay, value. Good, good. I'm glad you guys you're understanding what I'm saying. Like I said, this is where most traders fail. It is here they fail. Some persons can get the trading, but at the end of the day, your account is breached. It is because of this. They don't want you to know this. Prof firms can sue me because of this thing I'm telling you now, but they cannot sue me. But I'm trying to tell you the truth. This is the secret they are not telling you. In fact, this is the first step. Know that the account you're trading is not that big account they gave to you. It is a maximum drawdown, the 10% max drawdown. That is what you're trading. Meaning, if you get to that maximum drawdown, you have blown the account. The account is blown. This is the first secret they don't want to tell you. Note this. All right, let's go to the second one. You have not answered my previous question yet. Yeah, about lot sizing. We know that volatility varies for every pairs and as okay about lot sizing. Now, for instance, if you want to trade Euro USD and GBP JPY. Euro USD and GBP JPY, they have two different values. I think GBP JPY has higher value than Euro USD. Now, for Euro USD, if you want to trade Euro USD, first your you should have your what is it called? Your pip risk, the amount of pip you want to risk on a particular trade. All right, you should have the amount of pip you want to risk. Secondly, you should know the percentage you're risking. You should know the percentage you're risking. Now, with these two things, you can be able to know the different lot sizes to use. Let's put it into practice. Let's put it into practice. So, for instance, I'm answering your question now. Let me put up the question so that you guys know this is the question I'm answering. The guy says about loss sizing. We know that the volatility varies for different pairs, and as such, using one same lot size for different pairs is not visible. What can be done at this point? Now, I'm answering this question. This is what you will do at this point. All right. So let's say our peep risk is let's say we are risking 30 pips. Okay. Then our percentage risk. Now, percentage risk for every account is, let's say there is an account of okay, let's say account balance, account equity, equity is $50,000. Equity is $50,000. Now, for emphasis sake, equity is not what you are trading. What are you now trading? You are trading overall the max drawdown. So let's say drawdown, max drawdown slash actual actual balance, actual balance, max drawdown slash actual balance, which is 10%, abi 10%, 10% equal to, sorry, equal to, what is 10% of $50,000 is $5,000. So the actual account you are actually trading is $5,000, not 50,000. So automatically our account balance is $5,000. So what are we now risking now? We are risking, so let's say we are risking just 2% risk amount. So our risk amount is 2%, is equal to 2 2%. Now that 2% is equal to 2% of $50, $5,000. 2%, 5,000 multiplied by 2% is $100. So 2% of $5,000 is $100. So this trade, what we are risking on this trade is 2%, which amounts to $100. Our equity, that's the prop firm account we bought, was $50,000. But that is not the account, that is not the actual account we are trading with, the explanation I just gave. The actual amount we are trading is actually 10%, which is the max drawdown. And that 10% is $5,000. So the actual amount we are trading is $5,000. So, and then our risk, what are we risking? We are now risking 2% of $5,000. We are now risking 2% of $5,000. And 2% of $5,000 is 100%. All right. So now the next thing is you now go to NForex. NForex is where you calculate your lot size. NForex is where you calculate your lot size. So let me NForex is where you calculate your lot size. So let's go to NForex now. Let's go to NForex. Let's go to NForex. Yeah, this is NForex. Now from NForex, you have these options. This is where you now calculate your lot size. First, our account is in USD. If your account was in euro, you can change it to euro. But at this point, our account is in USD. Okay. Then our account is $5,000. That's our account size. Account size is the amount $5,000. Remember, it's $5,000. That's actual amount. Now change this risk percentage to swap money. Swap it to money. So how much are we risking? We are risking $100, which is 2% of $5,000. 2% of $5,000. And our profit, our stop loss, we're risking 30 pips. 30 pips stop loss. So we put 30 pips stop loss. Then let's say for instance we are trading euro JPY, or let's say euro USD. Let's say we are trading euro USD. Okay, so you now change it to euro USD. Once you change it to euro USD, you click on calculate. It calculates and gives you the lot size. The lot you have to use is 0.33. That's the lot size you will use. Now, if you use this lot size, it means once this trade closes and you don't profit, you're going to lose $100 on this trade. But if you profit, probably and you used 1:3, you're going to profit $300. Okay, so you're using 0.03. Now, let's now say it is not Euro USD, it is now GBP USD. If you change it to GBP USD, same parameters, your account is USD, the account size $5,000, you are risking the same $100, which is also on 30 pips. Change it to GBP USD. Say, okay, it's still giving us 0.033. So let me check GBP JPY. GBP JPY. Now, GBP JPY, the same USD, the same $5,000 account, the same amount you are risking, the same 30 pips we are risking. Now, they will ask you the current price for USD JPY. The reason they are asking you the current price for USD JPY is so that they can convert JPY to USD and use it to calculate the main lot size you are going to use. So if I check the current price on USD JPY, the current price is at 147.436. 147.436. So let me input it. 147.436. That's the current price for USD JPY. Click on calculate. Can you see? Now you see that the lot size is now different from the other ones. The lot size now is 0.49. But the other one is the lot size was 0.3. You are still going to lose $100 if the trade does not go well. The other one now, which was Euro USD and GBP USD, they were 0.33, but this one is 0.49. So this is how you calculate it. You come to nforex.com, and you calculate it here. All right. So I don't know. Have I answered your question? 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 So I want to drop the nforex here. So I'm dropping it so that you will know that this is the nforex calculator. All right, perfect explanation. Okay, so let's move on. Let's move on. I think I've been able to answer that question. So let's move on. Let's continue with, let's continue with Let me take it, but let me share back the screen. Okay, so that is how to calculate the lot size. All right, so let's move on. 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 So, what's the next thing now? Now, the next point you should note is this. The next point you should note is this. Simultaneous trading. Avoid simultaneous trading. Avoid simultaneous 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 trading. Okay. Simultaneous trading. Now, avoid simultaneous trading. What do I mean by avoid simultaneous trading? This is what most traders do. Even in their normal accounts, there are some even normal accounts that kicks against that. Avoid simultaneous trading. What is simultaneous trading? Simultaneous trading is actually when you place a buy and sell position on the same pair, placing a buy and sell position on the same pair. Probably because I don't know, maybe I don't know what you're trying to do, but it is a very, very wrong thing to do with a prop account. You don't place buy and place sell on the same pair. Your account might be breached. It's one of the hidden rules. They might not tell you. Prop firms might not tell you. But these are one of the reasons why you just wake up and then you find out that your your account has been breached, or they will tell you that you have breached the account. It is because sometimes some persons, what they do is what they do is so from your explanation, that means we cannot use exact same lot size on different pairs. Am I right? Yes, you can't use same size, same lot size on different pairs. Now, I know where you're coming from. Where you're coming from is when I explained that your lot sizing should be consistent. Do you understand? Now, what I'm trying to explain is your lot size being consistent is not today you are using different kind of lot size on the same pair, or you you are supposed to risk $100, and then instead of using the normal lot size that can give you that $100, you're using like one lot. That is what I'm trying to explain. But when it comes, and I believe I explained that I know different pairs has different values. Get the exact lot size you're supposed to use with calculating the lots the position lot size. Use position calculator, calculate the lot size you're supposed to use, and use that lot size, be consistent with it. So not like example, now you're supposed to be using 0.33 in order to lose $100 on a trade. Tomorrow you now use 0.35. Next tomorrow you use 0.4. That is on Euro USD. You're supposed to use 0.33 like we have calculated. But now you start using, next tomorrow you use 0.5. Another day you use 0.01. Another day you use 0. Don't be inconsistent in your lot size. Another question on strategy. Sir, is there consistency in strategy? Because I might have a strategy, and if the market don't give me the base strategy, okay, I'm coming to that one. So let me finish explaining. I think that's the next thing I'm going to talk about. That's the next thing I'm going to talk about. So avoid simultaneous trading. Stop placing buy and sell positions on the same pair. You place buy, you place sell position because maybe you are thinking if it goes buy, then I'll close. Then if it comes back to go to sell, I will still close out of profit. Is very, very wrong. Some prop firms can breach your account because of that. They can breach your account. Those are some of the hidden rules you don't know. Then the next thing now is consistent strategy. Now, this will answer the last question, the other question this guy asked. Now, when it comes to consistent strategy, if you want to trade a prop account, do you know that from the back end, they know your approach to the market, they know how you are approaching the market. So once they start seeing different kind of approach, they know that you are likely not going to pass this proper and your account will be breached. Every prop firm account, every prop firm, they know your approach. Before you take any trade, they know the approach you took before taking that trade. You might not know that they know, but they know. I'm telling you this for free. They know. They know every approach you're using. So once they start seeing different kind of approach, it's going to cause a problem for you. So once you want to trade a prop firm, use at most two approach. Two approach. At any point in time when you come to the market, or two strategies, at any point in time when you come to the market and you discover that these two strategies gave you no entry, leave it, don't trade. That's why I said consistency over time. Be consistent with that, with those two strategies that you've started with. If you chose only one strategy, continue with it. If your approach before you take any entry, you must see a liquidity sweep, stick to that seeing a liquidity sweep before taking your trade, because they've already dictated that you are taking your trade after every liquidity sweep. If that is the only one you want to make use of, continue with that. If you want to add another one, continue with it. If it is breakout and retest, continue with breakout and retest. If you want to add liquidity sweep and breakout and retest, continue with the two. If it's a chart pattern process, continue with the two. Every strategy you are using, don't use scattered strategy. At least two is okay. Do you understand? One, you can use one. But if you want to use more than one, two is advisably okay. Once you start using three, four different kind of strategies on one account, they will detect it and your account will be deactivated. This is also one of the reasons why you think you did not break any rule. But why was my account deactivated? You are not consistent. You are not consistent. If you must use more than one strategy, it should be only two. At any point in time, when you come to the market and you discover that, oh, this is not working, or there is no entry on this strategy, leave that entry. Leave that, leave that entry. Okay, sorry. We are back. Sorry. We are back. My network just had some challenges. We are back. So, if at any point in time you want to make use of more than one strategy, please, it should be just two. It should be just two, so that your account will not be breached. All right. It should be just two strategies. So let me quickly start rounding up now. Now, the next thing you have to do, this is a subtopic now, a subtopic. Build a trading plan. 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 First, in your trading plan, what are the things you consider? Consider the instruments slash assets. Now, if I will advise, trade simple instruments so that you will not mess up your trading. Trade simple, choose simpler instruments to trade. No need of trying to trade trying to trade gold and all that when you know that you don't know how to trade gold, and then you want to start trading gold. At the end of the day, it might backfire and you will lose your account. So choose your assets wisely. All right. Choose your assets. Secondly, choose a session. Choose session. Choose a session to trade. Is either you're trading the New York session, the London session, or the Asian session. Any session that will be suitable for you, choose that session to trade. The next thing is consider your setup. What is your setup? What are you looking out for? What are your confluence before you take a trade? You should plan what your setup should look like before taking a trade. Entry rule. Entry rule. Now, entry rule is that thing you must see before you take an entry. If you don't see it, don't take entry. Don't enter entry, any trade. You must have an entry. You must have an entry. You must have an entry. All right? Before anything. Know that this is what I should see before I enter. If you don't see that thing, don't enter the trade. Have an entry. Another thing is day trading is better. Choose day trading. Now, in as much as scalping is people do scalp, but I will not advise you to scalp when it comes to profits. Scalp is people that want to make money quick, and run away. And in the process of scalping, you can be under pressure. Breathe, calm down and trade. Calm down and trade. So it is better you choose day trading. Swing trading is not advisable because some prop firms does not allow you leaving your trade over the weekend or over the night, overnight. So it is better. It is better you use day trading. Not to digress, please, but I recently blew two accounts on one particular prop firm because of all you're teaching us currently. If I'm to pass the third account I'm on, does this affect payout? It doesn't affect your payout. If you can follow these rules, you will make your first payout. Trust me, your first payout is going to be as swift as anything you can ever imagine. All right. Then another thing, stop loss placement. Always have stop loss. Always consider stop loss. Always consider stop loss. Another thing is take profits. Take profits. Always consider your take profit. Daily loss rule. daily loss rule. Now, in as much as they have given you a daily drawdown, do not get to that daily drawdown. Your daily loss rule should only be, if I take this trade and I lose it, that's all for the day. There is no need to trade for that day again. If you take that trade and you lose that trade, don't trade again. Even if you make profit, don't trade again. That day is gone. Do you understand? Because overexcitement and revenge trade will always kill you in the forex market. So once you lose a trade, don't try to trade again. That should be your daily loss rule. That should be your rule. Once you try to make use of 2% of your account and you lose it, close for the day. But if you trade and you make profit, also close for the day. Don't overtrade. Don't be too excited. Don't revenge trade. All right? Journaling. Always journal. This should be part of your trading plan. Journaling. Always journal all your trades. And lastly, allow hours of exception. Of exceptions. Now, what are the hours of exceptions? News hours. Don't trade during news. Please, I am begging you. Even there are some prop firms that does not allow news trading. There are some prop firms that actually does not allow news trading. So when it is time for news, please do not trade. Don't trade news. Don't trade news, please, please, and please. So news is part of hours of exceptions. Then hours of exceptions can also be when you reflect, hours when you take your time to reflect on your progress so far. So every week, make sure you have a time to reflect on the trades you've taken through your journals. No, did I do well? Did I not do well? What is it that I did well, and what is it that I am not doing well? All right. Now, what are the behaviors while trading? Behaviors while trading a prop account. Behaviors, behaviors for prop challenge. What are the behaviors you should exhibit? Now, treat that challenge account like a funded account. Treat like a funded account. Now, don't trade that account like a challenge account. Don't trade it like an evaluation. Trade it like it is funded. Trade it like it is funded. At the back of your mind, this account is funded. You're not passing through any phase. Before you know, you won't even know when you pass that account phase. Do you understand? Don't rush to pass it. That's why most prop firms now give time. They give you time, unlimited. You have all the time in the world to pass it. Make sure you are trading. Do you understand? So trade it like a funded account. The next thing, trade like a fund manager. Fund managers are not about the huge profits. They are about compounding. They are about compounding. So trade like a fund manager. Avoid revenge trading. Avoid revenge trading. Like I said, once you lose, you close for the day. Avoid revenge trading. Avoid revenge trading and focus on consistent, consistent wins instead of big wins. Now there is a difference between big wins and consistent wins. Today now I can use a $100 account and push it to $1,000 or $2,000. That's a big win. But can I be consistent with it? So focus on being consistent in your winning than you want to make the big wins every you can't make the big wins every day. But if you focus on being consistent in winning little by little, gradually, little by little, you are going little by little, it is going to be better for you. I'm running now. So what is psychological behavior? Psychological behavior. These ones are just add-ups. I've touched the main thing. Psychological behavior. Psychological behavior. Psychological behavior. Now, what are the psychological behaviors? You should have a routine. Have a routine. Have a routine. The routine includes having your sleep, pre-market checklist, having some time to relax and sleep, then pre-market checklist. Now, pre-market checklist means before you start trading, before you start trading, check check around if what you have said you will do is actually what you are doing before you start trading. So pre-market. Now, another thing is use breathing methods. Use it sounds simple, oh, it sounds very simple. Use breathing method. Tell yourself, breathe, calm down. You know that if you are not if you are not psychologically stable, the only person that can calm you down is you. Do you understand? You can get help from every places. You can get help from anywhere. But if you decide not to allow that help sink in, you will never be okay. But once you tell yourself, okay, I'm going to allow this help to help me. I'm going to allow this help to sink in. Tell yourself, calm down. Breathe. It is not a war. It is not a fight. Breathe. It is not the end of the world. Even if you hit stop loss, breathe. That is not the end of the world. Calm down. All right? Calm down. Calm down. Another thing is avoid over risking. Avoid over risking. Now, because you've had a lot of wins, you now think that okay, I think I should up my okay breathing technique. So because you've had a lot of wins, you're not telling yourself, okay, I should up my game. You now start now start over risking. It's very dangerous. It is very dangerous. All right, it is very dangerous. It is very very dangerous. The last thing, the last thing, the last thing. Do not get attached to your account. Detach yourself from your account. Detach yourself from that account. Now, once you detach yourself from that account, it helps you not to pressure it. It helps you not to, put all your pressure on the account. Detach yourself. Just be consistent. Just follow the rules and detach yourself. Sir, we can see you. Yes, now you can see me now. You don't want to see me before. Detach yourself from your account, please. Detach yourself from your account. So, if you can abide by these rules, if you can take these steps on what I just taught now, trust me, you'll be smiling on your first withdrawal. You'll be smiling on your first withdrawal. So, if all these things I've explained so far, you have gained, if you have gained knowledge from everything I've explained so far, just type, what will you type now? Just tell me one thing. Just type one thing you have gained from this lesson. Type one thing you've gained from this session for me to know that you really gained something. You've really gained something. Type one thing. On the comment section, type one thing that you have gained from this session. It's an important question. How many percent is over risking? Over risking is anything above 5%. Anything above 5% of you. Of course, by now, each and every one of us, sorry. So we already know what we are risking. We are risking our max drawdown. That's what we are. Sorry, we already know what we are trading. What we are trading is our max drawdown. What we are trading is our max drawdown. All right. So if you've learned something, type on the comment section what you've learned. So Kelly C says, don't trade news on a prop firm account. Very important. You can play around with news on your personal account, on your normal funded account, on your own account, but on a prop account, it's very risky. It's very dangerous because some prop firms do not even allow news trading. Some prop firms do not allow news trading, and news can be very, very volatile. If you are wrong, if you're on the wrong side, it can actually mess your trading up. And then, like the news that came out last night that wasn't stable, a news like that can actually mess you up. It can mess your psychology up. You will think that, am I getting it right? Am I getting it wrong? What is happening? So don't trade news. Don't trade news. On no account should you trade news. It is very, on a proper account, it's very, very risky. Very, very, very risky. Very impactful lesson. Okay. Should one trade daily drawdown as a maximum take? No, don't trade daily drawdown. Don't trade a daily drawdown. This one says, sir, we can see you. I can see you too. I can see you too. Tell me what you've learned. Tell me what you have learned. Give me one thing that it is a take home for you. Something that you've learned. Something that you've learned. So, in the next, I'm going to be rounding up this class in the next 6 minutes. So, I'll be ending this class exactly 1:45, 1:45 p.m. So, we can use this time, ask your question, and tell me what you have learned from this session. Ask your question and tell me what you have learned from this session. Your question is either a question or tell me one thing you've learned from this session. One thing you've learned from this session. So, like I said before we started, it is recorded. It is recorded, so you can come back and rewatch it. It will be here. You can come back, rewatch it anytime. If you still want to, go through it, come back and watch it. Okay, Samuel says, I learned consistency in lot sizing and strategy. Very good. Very good. Very, very important. Consistency both in lot sizing and strategy. You should be consistent with these two things. Okay, Lawrence says, I learned that not the actual balance is your trading balance, but the daily drawdown. That means if you are trading with 10K, your account actual balance is 1K. Not daily, the max drawdown is not daily, it's a max drawdown. Okay. I and you get my point. You get my point. But in place of this daily, it should be the maximum drawdown. It should be the maximum drawdown. This is a very good lesson you learned. Very, very good lesson. Very good lesson. So the actual balance is not the account you're trading, or is not the account you're giving to. So if you have an account of $10,000, that is not your balance. Your balance is automatically $1,000 because $1,000 is 10% of your account, and that's $1,000 is what you're trading. So if $1,000 is gone, you have blown the account. So what you're actually trading from the $10,000 is $1,000. All right. So that's a very good lesson Lawrence learned. Then Dennis Wintek said, I learned to avoid trading revenge. Yes, revenge trading is very, 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 very dangerous. Very, very dangerous. As dangerous as it is very dangerous. It can land you into a serious problem when it comes to the forex space. In fact, forex space entirely, not just trading prop accounts. It is very, very dangerous when it comes to trading in the forex space in general. All right. So avoid revenge trading. Then Mother Monica Juma said, I've learned the rules to apply during prop firm, like trading the 10% and not the total amount. Yes, what you're trading is a 10% max drawdown and not the total amount. Now, this will actually help you to risk properly, to help you to risk properly. Okay, to help you to risk properly. We have 2 minutes to end this class. So Daniel said, I learned that we should practice proper risk management with proper lot size. Super class. Very good. Yeah. Proper risk management with proper lot size. That is a very good lesson you learned there. Very good lesson. It is experience to learn that proper risk management is very, very important. Very, very important. Tell me what you learned. 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 So far, so good. It has been a very, very wonderful session. So, thank you very much, guys, for joining. Thank you for being in this space. Thank you for trusting Wave. Like I said, if you want a prop account to trade, if you want a prop account to trade with, Funded Next is the account for you. Yeah, Funded Next is a prop account for you to trade. And if you want mentorship, TradeWave has got you. We have both online mentorship and physical mentorship for those of you in Abuja. So thank you very much for joining. And this is Miss waving goodbye to you. Ciao. Bye.